Plug Power has been powering up investors by participating in concurrent non-deal roadshows in Paris and Boston. The company's chief financial officer, Paul Middleton, attended investor meetings in Paris, organized by Redburn Atlantic, while President and Chief Revenue Officer Jose Luis Crespo and Vice President of Investor Relations Roberto Friedlander engaged with investors in Boston, hosted by Canaccord. These events allow companies to present their business to institutional investors without issuing new securities, maintaining open communication with the investment community. Plug Power, based in Slingerlands, New York, focuses on hydrogen fuel cell systems, electrolyzers, and related infrastructure. The company has deployed over 72,000 fuel cell systems and 275 fueling stations globally, with hydrogen production plants in Georgia, Tennessee, and Louisiana, collectively producing 40 tons of hydrogen per day. Clients include major companies like Walmart, Amazon, and Home Depot. However, its operational growth has long been overshadowed by high cash burn and significant debt, which continue to be addressed. For example, Plug recently raised $370 million through a warrant inducement agreement with an institutional investor. This deal involved the exercise of warrants for 185 million shares at $2 per share, and new warrants were issued with a $7.75 strike price, potentially raising an additional $1.4 billion. To further financial progress, Plug launched Project Quantum Leap, aiming to cut $150 to $200 million in annual expenses through workforce reductions and optimization of discretionary spending. These efforts have improved gross margins from negative 92% in Q2 2024 to negative 31% in Q2 2025. Further savings are expected from retiring older power purchase agreements and reducing inventory, which could free up over $100 million in cash by the end of fiscal 2025. Meanwhile, Hyperscale Data placed an order for 1,000 Bitmain Antminer S21 plus Bitcoin miners, which will be installed at its Michigan data center. The deployment of these miners, beginning as early as this October, is part of the company's effort to optimize its mining operations. The new machines will replace older, less efficient models, increasing mining performance by up to 135%. The installation will take place in 4 megawatt phases to minimize disruption to existing operations. Executive Chairman Milton Todd, Alt3, highlighted that the Michigan facility will continue to run both AI data center operations and Bitcoin mining concurrently. This dual approach leverages the company's infrastructure for maximum efficiency, allowing for both expanded AI offerings and enhanced Bitcoin mining productivity. The S21 Plus miners, capable of processing up to 235 terahashes per second, will significantly boost the facility's overall output as Hyperscale Data aims to upgrade around 20 megawatts of Bitcoin mining capacity. The planned expansion will result in approximately 5,000 S21 Plus miners at the Michigan site, improving mining efficiency. In line with its long-term strategy, Hyperscale Data also confirmed that it will continue to hold all Bitcoin mined through its operations in its balance sheet as part of its digital asset treasury strategy. This is aimed at building a $100 million Bitcoin treasury, supplementing mined Bitcoin with ongoing open market acquisitions. Additionally, Hyperscale Data reiterated its commitment to providing monthly cash dividends for its Series D cumulative redeemable perpetual preferred stock. The company has successfully paid 39 consecutive monthly dividends, maintaining a 13% annual dividend yield. Transitioning from crypto to cars, Faraday Future completed an investment in NASDAQ-listed QLGN, totaling $30 million. The investment has already yielded an unrealized gain of nearly 140%, showcasing FF's growing footprint in the crypto space. QLGN is set to be rebranded as CXC10, focusing on Web3 and cryptocurrency products. FF plans to leverage its expertise in AI and user ecosystem development to support this new venture. FF also keeps floating, following a setback when a prototype of its FF91 EV caught fire at the company's headquarters, causing some damage to a satellite office. The company clarified that the incident involved a non-production prototype and that no injuries occurred. It also stated that the fire would not affect customer vehicles. Later, FF announced the finalization of the U.S. production assembly plan for its FX Super One electric vehicle. With component supply now set to begin, FF is working toward delivering the first U.S. version FX Super One by year-end, marking a key milestone in the vehicle's mass production. Ongoing testing and validation are also taking place in the U.S. and UAE, with the UAE launch scheduled for October 28th and deliveries starting in November. FF also showcased its EV models, the FF91 and FX Super One, at the WETEX 2025 event in the Middle East, receiving praise from UAE and Dubai royal families, as well as senior government officials. Management-wise, there was the appointment of 3 new leaders to its executive team. Stephen Park as Head of Investor Relations, Todd Harrington as Deputy General Counsel, and Kevin Voong as Corporate Treasurer. These appointments are intended to enhance FF's operational efficiency, governance, and growth as the company continues to work on product development and delivery. Next, Worksport, through its subsidiary Travis Energy, has reached a major milestone by securing a spot in the U.S. Department of Energy's National Renewable Energy Laboratory, NREL, Technical Assistance Program, NTAP. The collaboration will focus on analyzing the performance of Travis EtherLux Pro heat pump, featuring zero frost technology in extreme Alaskan conditions. The goal is to evaluate its energy-saving potential for homes in the state, particularly in the cities of Fairbanks, known for extreme cold, and Juneau, cold and humid conditions. It will be a crucial step in validating zero frost capabilities in addressing the limitations of conventional heat pumps that fail in sub-zero temperatures. The EtherLux Pro heat pump with zero frost is a breakthrough technology designed to operate efficiently in temperatures as low as minus 56 degrees Fahrenheit, eliminating the need for defrost cycles. This advancement could transform cold climate heating and help reduce the reliance on fossil fuels, which still heat 60% of North American homes. Travis aims to demonstrate the technology's potential to lower household energy costs, increase comfort, and provide reliable heating solutions for regions with extreme cold. The project's analysis will include energy savings analysis using the Alaska Heat Pump Calculator to quantify cost reductions in Alaskan homes, a technology assessment identifying challenges and benefits of deploying the system in Alaska's diverse climates, and a future research roadmap creating a roadmap for field demonstrations and broader adoption of zero frost technology. The results are expected to accelerate the global adoption of zero frost as it addresses key barriers to the heat pump market, which is projected to exceed $135 billion by 2030. The technology also opens up new revenue streams and licensing opportunities for Worksport as the global demand for energy-efficient, sustainable heating solutions grows. As for Worksport itself, its growing clean tech portfolio will soon see the launch of the Solis Solar Tonneau Cover and COR portable energy system in Q4. These products are part of the company's strategy to enter the multi-billion-dollar clean energy and electric vehicle support markets, offering a portable nanogrid system capable of powering worksites, campsites, and emergency services. Worksport's B2B sales have surged, with a 42% increase in dealer adoption over the last quarter, and revenue is growing at a 25% geometric rate per month. This rapid growth is driven by Worksport's focus on high-margin branded products. The HD3 tonneau cover, an evolution of the AL3 model, will further penetrate the commercial and dealer markets, expected to launch in 2026. Worksport's momentum is evident in its strong Q3 2025 performance, with gross margins exceeding 30%, prompting it to predict that its clean tech products, Solus and COR, will contribute significant revenue in 2025 and lead to exponential growth in 2026. Until then, for more on stocks and crypto, follow Ascencore. See you next time.